What if I told you that one of the largest shifts of wealth and power in modern history is happening right now quietly, without breaking news alerts, without market crashes, and without most people even noticing? While the world argues about politics, elections, and short-term market moves, China has been executing a long-term strategy that could fundamentally reshape the global economy. Not through war, not through diplomacy, but through something far more subtle: resources. And once you understand what's happening, you start to see the global financial system very differently. China is no longer just the world's factory. That story is decades old. What China is becoming is far more strategic, the dominant controller of the physical materials that modern civilization depends on. And when you control the materials, you don't just influence manufacturing, you influence prices, technology, national security, and economic power itself. This isn't speculation. It's documented, ongoing, and happening across global commodity markets right now. Every modern industry relies on specific metals and materials: semiconductors, electric vehicles, solar panels, defense systems, medical technology, aerospace. All of them depend on a relatively small group of critical resources: copper for electrical infrastructure, lithium, cobalt, and nickel for batteries, rare earth elements for magnets, motors, and electronics. Without these materials, entire industries simply stop functioning. And China understands this better than anyone. Instead of chasing short-term profits, China has spent years executing a patient, state-backed strategy. Chinese state-owned enterprises have been buying mining rights across Africa and South America, stockpiling industrial metals, expanding processing capacity, and securing supply chains end-to-end. This isn't opportunistic buying when prices dip. It's systematic accumulation, backed by government policy and enormous capital. China already controls the majority of global rare earth processing, not just mining, but processing, which is the real choke point. Now, they're extending that dominance to other critical materials. Quietly, methodically, relentlessly. Here's the part most people miss. Every time China buys physical resources, they're doing something extremely important. They're converting US dollars into real, tangible assets. For decades, China accumulated massive dollar reserves by exporting goods to the West. Now, they're turning that paper wealth into the literal building blocks of future industry: copper instead of cash, lithium instead of ledger entries, silver instead of IOUs. That shift from paper currency to physical resources represents one of the largest and most consequential wealth transfers of our time. Silver shows this dynamic perfectly. Silver is no longer just a monetary metal, it's now strategically critical. It's essential for semiconductors, solar panels, defense systems, medical technology, and electrical grids. Demand is exploding, and supply isn't keeping up. In China, investors have become deeply skeptical of paper-silver markets, where dozens, sometimes hundreds of contracts claim ownership of the same physical ounce. So instead of paper exposure, they're demanding physical delivery. The result has been shortages, extreme premiums, and silver trading significantly higher inside China than global prices. This has crossed into speculative territory, and corrections are likely. But beneath the speculation is a real signal. China wants physical control over strategically important materials, not paper promises. This matters for the US dollar. When countries convert reserves into resources, dollar demand falls. When trade shifts away from dollar settlement, dollar demand falls. When alternative financial systems emerge, dollar dominance weakens. We're already seeing a structural dollar down cycle, not a short-term dip, but a long-term trend driven by real changes in global trade and reserves. And China isn't alone in this shift. Japan adds fuel to the fire. As Japanese interest rates rise, massive carry trades that supported US assets begin to unwind. That means selling pressure on US bonds. Less demand for dollars. More stress on the system. These forces aren't isolated, they reinforce each other. Resource competition, shifting trade systems, and currency realignment. Together, they point to a world where physical assets matter more and paper currencies matter less. This isn't about panic, it's about awareness. The global financial system is changing, not overnight, but structurally. And history shows that when the rules change, Those who understand the shift early are far better positioned than those who ignore it. Because in the future economy, the question won't just be who has the money, but who controls the materials that make everything else possible.